Hi there, welcome to Kneppy Invests. Welcome to a very wet Brisbane. It has been raining at my place now for 27 straight hours. We've had over 300 millimeters at my location. So for those who aren't in this area of the country, I hope you're having a great weekend, or start to the weekend anyway, because Saturday has just begun for me as I'm recording this video. Anyway, sometimes I do tend to waffle on. Time to talk about a company I have not discussed before in one of my videos, and that is Camplify. One of the reasons I have not discussed Camplify is because it is a recent IPO, 6 months ago, actually about 8 months ago, middle of 2020. And even though I tend to wait at least 6 months before I become interested in IPO, I will pay attention to how IPOs do perform. So having tracking the performance of Camplify, not only financial performance, but also its share price performance. And the thing that really stood out for me when it came to Camplify was how the chart was looking. So a lot of positive sentiment behind this company. And one of the reasons or byproducts of that positive sentiment I started to hear Camplify being mentioned in a lot of podcasts. And a lot of the podcasts I do listen to are professionals. And the way I define professionals is if you make a living talking about investments, equities, that sort of thing, you are a professional. And when I started hearing a lot of professionals talk about Camplify, that really also piqued my interest. So in this video today, what I'm going to do is discuss the first half results. And the other catalyst behind me doing this video was their December quarter results. This company was operational cash flow positive by $1.8 million in that quarter. Camplify is a sharing community for caravan and motorhome owners, and for those who want to rent out a caravan and motorhome if they are thinking of maybe doing a around Australia trip or something like that. So Camplify brings those two group of people together, and this really makes sense because apparently people who own caravan and motorhomes only utilize the caravan or motorhome about 4 times a year, and the rest of the year it's just idly sitting in their yard, their garage, doing nothing. And the founder of Camplify, Justin Hales, went for a walk in 2015 or something like that. He just saw all these caravans and motorhomes just on the side of the street in people's yards doing nothing. And he thought, why not? Why can't these caravans and motorhomes who are doing nothing produce some income for those people who own the caravan and motorhome? And that's the idea behind Camplify. And I think they were talking about those who own caravans and motorhomes can produce or receive about $10,000 of revenue per year by renting out their caravan and motorhome when they are not using. So I completely understand where this business is coming from and their business model as well. Now, the company was founded in 2015 when Justin Hales went for that walk and listed on the ASX on June 28, 2021. So it's been on the ASX for about 8 months right now. The founder and CEO, Justin Hales, he has a 14% holding. And two of the other really interesting shareholders right now, not the major shareholders, but Tourism Holdings, 17.8%. They are a similar sort of company in New Zealand, if I remember correctly. And NRMA Treasury, they have a 5.2% holding. And I do think that is related to NRMA, the company. The market cap of Camplify at $3.11 is $120 million. And the ticker code for the company is CHL. Before we have a look at the half-year results, Camplify do release Appendix 4Cs because this company has not been profitable or cash flow positive, and the ASX wants this company or any other company that can have cash flow problems or is cash flow negative, they want them to produce these quarterly cash flow reports. And the December quarter did look pretty good for Camplify. Receipts to customers to $7.4 million, and the company was operational cash flow positive by almost $2 million. There were some interesting changes in some of their spending. For instance, product manufacturing operating costs fell from $7,400 last quarter to $3,000 this quarter. Now, would want to know why that is so. Advertising and marketing fell from $1.3 million the previous quarter to $427,000 this quarter, while staff costs actually increased from $1.3 million to $1.8 million. So there are some changes in the cost from the previous quarter to this quarter. And even though receipts actually did fall from the last quarter, a lot of those spending the company did, a lot of the costs actually fell by a little bit more than the decrease in receipts from customers. So the company went from being operational cash flow negative to operational cash flow positive. The company also has a lot of cash on hand, and because they were operational cash flow positive in this particular quarter, they actually grew that cash from $17.8 million to $19.3 million. So it was actually this quarter that was the true catalyst behind me wanting to do a video on Camplify. Now let's have a look at their financial performance for the half year and compare it to 1 year ago, the first half of financial year 21. Revenue has doubled from 3.2 million to 6.8 million. Gross margins have fallen from 73% to 55%. I prefer to see gross margins at least stationary or stable, preferably going up with time. So that's one little negative that gross margins did for. The company went from being operational cash flow positive 3.3 million to negative 918,000. Now, the operational cash flow in the previous half year was surprising because that operational cash flow was greater than the revenue. And that is really unusual. You don't usually see that. And I did actually have a look at that to understand why or how the operational cash flow can be greater than the revenue. And it was all about changes in working capital. They've been loss-making the last 2 years. Last year, loss-making by 154,000. Now that's up to 2.8 million. I've already mentioned they have $19 million of net cash. A couple other things that are interesting is hirers, how many people are hiring these camper vans, motorhomes, caravans, and how many RVs they do have. The hirers, they do a cumulative, which I don't really understand why it's cumulative. Why not just say how many hirers use their services in the past half year compared to the previous half years? But cumulative hires is up to 93.3 thousand. 1 year ago, it was 70.1 thousand. And RVs have the amount of RVs that are able to be rented, and I understand why this is cumulative, has grown from 6.2 thousand to 7.3 thousand. Now, a few interesting tidbits from the half-yearly report, and this is note 3, revenue. This is where their revenue is derived, and these are the sort of things I do like to look at. So revenue from contracts with customers, which include booking fees, GPS tracker revenue, listing fees, premium membership fees, retail sales and commission, and van sales revenue. That amounted to 4.4 million. By far, the most lucrative revenue stream is booking fees with 2.4, but we can't discount stuff like GPS tracker is 25,000, listing fees 910,000, premium membership fees 129,000, and van sales revenue 824,000, which was up from zero the previous year. That could be a one-off. I'm not sure how sustainable van sales revenue is, simply because it went from zero to that. Maybe it's a new revenue stream they've introduced in the past year. The other interesting thing here is insurance. They do receive revenue through insurance, and that did grow from 621,000 to 2.4 million, and by far it was their strongest growing revenue stream. I'd like to see what is involved with insurance because that is really interesting in my opinion. Overall revenue grew from 3.2 to 6.8 million, as we mentioned in the previous slide, but it's just really interesting to see where all the revenue for this company is coming from. Now, when it comes to cash flow statements, particularly in the half year or yearly report, there's not enough information in that to my liking. And I do prefer a little bit more information, particularly when it comes to changes in working capital. Now, sometimes company will provide the changes in working capital in the notes or in the presentation, and Camplify have provided that in their presentation, their half-year presentation. So what they've got here is they start at EBITDA and then work their way down to cash flow from operations, free cash flow, and then net cash flow. For instance, in this half year, they were EBITDA negative by 2.8 million. You add back changes in working capital, which was 1.9 million, and they came out with cash flow from operating activities, negative 0.9. Capital expenditure, they spent $1 million on capital expenditure, which is property, plant, and equipment, which means their free cash flow was negative 1.8 million. So I do like these sort of information that companies can provide, particularly when it comes to changes in working capital. Have inventories increased or decreased? Trade receivables or trade payables, have they increased or decreased as well? And if we go back to 1 year ago, remember when I mentioned the operating cash flow was greater than the revenue, and they actually provided the reasons why in this little table, and the changes in working capital in that particular half year was 3.5 million. And that's the whole reason why this company was operational cash flow positive in that particular quarter by 3.3 million. Now to the daily chart for Camplify. This goes back to when they listed on the ASX. And one of the reasons I do want to wait a little bit of time before I even think about buying into a company that just has listed is a lot of hype usually is or surrounds the company when they do list on the ASX. And research has shown that if you invest in an IPO, more than likely you won't do well out of that investment. A lot of research has been done on this. And in fact, the time period they're looking at is 3 years down the line. And I think it's something like 60 to 70% of IPOs lose money. Well, not lose money, that's probably not the right way to put it. But 60 to 70% of IPOs are wealth destroyers for those shareholders who do buy, or investors who do buy into the IPO over a 3-year period. So keep that in mind when you do, or you think you're being seduced by an investment banker or a fund manager or someone who wants to get you to invest in an IPO. The majority of IPOs actually do lose you money over a 3-year period. Anyway, one of the reasons I do want to wait at least 6 months, sometimes as little as 3 months, but at least 6 months, is just to see if that initial hype in the IPO dies away. And when it came to Camplify, there was no initial hype that died away. Share price opened up at around $1.40. It fell to about $1.20 within about a month after it did list. So there was a little bit of selling that came in. So those who did invest in the IPO probably were selling at that point in time. But there was a breakout in Camplify's share price and around about late August. So maybe that was in regards to the full year results. And there was just this one big update on higher volume. Share price went from $1.40 to about $1.55. And that started a fairly long and significant uptrend in Camplify's share price. In fact, the share price went from $1.40 to a high of $5, which was reached in October. So a very short period of time, so a 2-month period of time, where the share price of this company tripled. Yes, tripled. But ever since that high in the share price at $5, the share price has been struggling and has been dropping. Share price has dropped from $5 to a current share price of $3.11. The other thing to notice here is when the share price was increasing, we saw pretty high volume during this period. When I'm talking about high volume, it's all relative to other periods when the share price was not rising. And you compare it to, or since the share price has started to fall and volume has really dropped off. So the hype in this company that's really began with that breakout in August has started to wane away. And I'm starting to hear this company mentioned less and less in podcasts as well. In fact, someone did mention it the other day in one of the podcasts and actually did say they actually sold out of Camplify upon the release of their quarterly report. So right now, sentiment has gone a little bit more negative than it was a few months ago, 5 to 6 months ago, and the share price does look like it's in a little bit of a downtrend right now. So no reason, in my opinion, to take a position in this company just yet until we see a breakout in the share price on high volume. That's the main things you want to look at, is for a share price to break out of its current trend on high volume. Preferably that breakout would coincide with some positive financial news. That's all I have for this introduction to Camplify, looking at their first half financial year 22 results. If you have any questions about this company, or maybe you've actually used their services in the past, maybe you do own a motorhome, caravan, camper van, and you actually do have it listed on Camplify. Now, I actually did go to the Camplify website just to see how much you'd have to pay per day to, borrow one of these camper vans, and I've saw prices as high as $250 per day. That does seem a little extreme for me, but that's just me. Maybe it is worth it. I don't know, because to be honest with you, Camplify and their services is not aimed for me. It's aimed for other people who love to go around the country in a camper van, a caravan, that sort of thing. So if you do have a question about this company, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.